Welcome to our VNQ quiz. Today, you'll face questions about the Vanguard Real Estate Index Fund ETF. Some easy, some tricky. Can you get them all right? Don't forget to subscribe to the channel and let's find out. What type of investment fund is VNQ? Real Estate Index Fund ETF. Technology Stock Fund. Gold Commodity Fund. Bond Market Fund. VNQ is Vanguard's Real Estate Index Fund ETF, designed to provide exposure to the broad U.S. real estate market. What is the main objective of a fund like VNQ? Outperform the market. Mirror U.S. real estate market. Invest only in tech companies.
Speculate on individual properties.
The primary mission of VNQ is to mirror the performance of the broad U.S. real estate market rather than trying to beat it. What kind of companies do REITs primarily represent? Technology startups. Agricultural businesses. Companies owning income-producing properties. Commodity trading firms. REITs, or real estate investment trusts, are companies that own or operate income-producing properties across various sectors. Which property types are typically included in real estate funds? Art galleries, luxury yachts, office towers, warehouses, apartments, vintage car collections. VNQ's holdings cover a wide range of property sectors, including office towers, warehouse complexes, apartment blocks, hospitals, and self-storage units. In which country is a fund like VNQ primarily concentrated? United States, Europe, Asia, global. While many companies within VNQ have international clients, the fund itself is geographically concentrated in the United States. Who would find a real estate index fund most appealing? Day traders. Long-term savers seeking diversification. Those seeking quick profits. Investors avoiding real estate. VNQ is appealing to long-term savers seeking diversification and a potential hedge against inflation, as property cycles can swing slowly. What potential benefit can real estate provide during inflation? Guaranteed high returns. No impact from inflation. A partial buffer against rising prices. Increased market volatility. Real estate has historically provided a partial buffer against rising prices, offering a potential hedge when inflation concerns arise. What is a recommended first step when investing in such a fund? Invest all savings at once. Never add more money. Wait for market peak. Start small and add regularly. It is advised to start small and add to the investment regularly, treating it like planting seeds that grow over time. How should this fund be ideally paired within a portfolio? With a broad global equity or bond fund. With only other real estate funds. With only high-risk stocks. With no other investments. To avoid over-concentration in property, it's recommended to pair VNQ with a broad global equity or bond fund. What annual portfolio review action is advised for real estate? Always add more. Prune if it grows beyond comfort zone. Never rebalance. Ignore its growth. Review your overall portfolio once a year, and if real estate grows beyond your comfort zone, prune it back to maintain your desired allocation.